Good evening at 6 p.m. The best variety of gospel use of knowledge's power broadcasts with Dr. Marseille Wells-Strozier. Information on how to reach Chia will follow today's broadcast. And now, here's your host.
Hello, and thank you, listeners, for tuning in to this week's show. Let's get started. First of all, Al, how are you doing?
I am truly blessed. Thank you so much. I was running to get it. The train caught me down there, right.
So when I got here, I said, is Al going to be here? And they said yes. So
Yeah.
I'm glad that you are here.
Yeah,
I feel
thank
as though if you're not here, I'm not complete.
Oh, wow. That's beautiful. Thank you.
Yes, and don't forget it.
Thank you. That is nice.
So anyway, callers, tonight we're going to be going back into home ownership and credit building, which is really an encore presentation from a few weeks ago. Actually, it's from our July 4th show. And if you are interested in participating in this conversation, please give us a call at 810-239-5733. Again, the number is 810-239-5733. Before I introduce my dynamic guest, I would like to say hello, Paul. Did I shock you?
Yes.
I thought she was forgetting about
you.
I
Say
thought she
hello.
used up all her compliments on Al.
Oh no, there are good words to spread
How
around.
about everybody, huh? All right, that's good.
So again tonight, I honestly every single month we're going to have this wonderful lady with us, 1 week a month from Flagstar Bank, who is one of our sponsors, who is actually the sponsor of this 1 year program. And we're going to introduce to you Cheryl Woodyard, who is the Vice President and Senior Branch Manager at Flagstar Bank. Since obtaining her current management position in 2005, Cheryl's overall responsibilities include banking and investment services, serving the greater community, and leading an outstanding team of bankers. So, Cheryl.
Yes.
Welcome back again.
Thank you. I'm, as always, very, very happy to be here. And I love being a part of sharing any knowledge that is going to help your listeners gain the tools necessary in this situation for home ownership and for building their credit and managing it to a positive end and getting that mortgage loan. And I'm happy to be a part of that. So
Thank you.
let's get
Thank
started.
you. I want to thank the callers who did call in on the show on July 4th in regarding to this topic, and the individuals who have reached out to Flagstar Bank for the opportunity to have the American dream of home ownership. What we learned on July 4th is that if you are paying rent, that you are financially able to own a home.
Absolutely. The surprise, though, is that most people don't realize until we run those numbers for them that if you have been paying rent for 10 years, that you get to a point where you realize, my goodness, I've paid, $70,000 or $80,000 worth of rent. That means, in essence, that you could have absolutely been a homeowner in that same time frame, given the right tools, which is to have a credit score that would qualify you for a mortgage, and also the income. So that's what we're going to talk about today. We're going to kind of piggyback on, like you said, the last show, so that we dig a little bit deeper into truly getting your listeners ready for home ownership.
Okay. Another thing that we learned about Flagstar Bank is that if we don't have a score of 600, that Flagstar Bank do have a process in order to help an individual to increase their credit score.
So what we want to do is, if we have to have a client hear the words that nobody wants to hear, you're not quite ready yet, we don't want you to leave feeling like we're just going to send you on your way and not at least give you some guidance and some resources to help you build your credit, to do some credit repair. And We do that with the hope that you will follow through and really truly take advantage of those tools that are available for doing exactly that.
Okay.
The first thing I always recommend is get a copy of your credit reports. Absolutely get that copy. You are entitled to an annual report free from all 3 credit agencies. To get that copy, you can either send your request to annualcreditreport.com, or you can make the call, but do expect a long wait if you do that. If you don't want to make the call, you can still send your request by mail to Annual Credit Report Request Service, P.O. Box 105-281, Atlanta, Georgia 30348-5281. And it's important to get the 3 credit reporting agency reports because you need to know if there are any errors or duplicate credit lines that are impacting your credit. You do have ways that you can get that information corrected. I recently had a client who had duplicate information on their report. They had no idea. The credit score was about 605. Once we walked through gathering the documentation and putting that information together and truly reaching out to the creditors to make certain that they knew that there was double reporting, it was corrected within about 45 days.
Okay.
The impact to that credit score was huge because once you get those incorrect lines removed, the score moves up accordingly. So gathering any information about your own credit, I absolutely highly recommend, because you don't want a score that is not truly reflective of your payment history.
Okay. I am familiar with Experian and TransUnion. What is the 3rd credit bureau?
Okay, so I'm glad you asked that. I want to go back to the annualcreditreport.com. If you go to that site, you will get it from all 3. All at once, so you won't even have to worry about which one. And I need you to know that you want to see all 3 because not all 3 will have the same information. Some of your creditors may report to 1 or 2 or possibly all 3. So the reason that you need to see all 3 is so that you know for sure what's out there on each one of them. And it's so important because if you just pulled 1, I need you to know that most creditors, when you are looking at a mortgage lending situation, they're going to be looking at all 3. So pull the 1. It doesn't cost you anything to pull your report, to make that request. If you're looking for the actual score itself, that may cost you a few dollars if you're trying to do it before you're in the lending situation.
Okay.
So take your time, pull it out, make that request. It's going to come to you. Print it out. Don't try to just look at it online. Print it out. Sit down with it and go line by line. Because if you don't look at it that closely, you may again have information that's being reported that's incorrect or duplicate lines. Either one of those you can get corrected in a relatively short period of time. It will take commitment on your part to do it. You can't just expect it to be a one hit and done. This is going to take a little bit of time. If you're committed to the process and you're working with a banker and a lender who is really excited about helping you get to home ownership, they're as willing to help and take that time to sit down with you as you are to hopefully get that loan going. So that's so important.
So let's say that if I do have a copy of my credit report and it's reporting a different score from all 3 credit bureaus, and then let's say if I decide to get the individual credit reports and I find an error, How do I go about correcting those errors on those credit reports?
I'm glad you asked. Okay, so the first thing is if you feel like there has been an incorrect reporting on your credit, you do have to provide the documentation to support your position that the creditor has made an error in reporting. So by that I mean you need to have your receipts or your statements or your proof to support the position that there has been an error. Do not send your originals. Make certain that you send those creditors only a copy of your proof that their information is incorrect. You're going to do a quick, brief note that will include, of course, your name, your address, your basic information, and let them know that there has been an error. Indicate that the attachments that you are sending, your receipts or your statements, are going to support them. Please making that correction. You'll mail those out. Generally speaking, there's going to be about a 30 to 45 day window where the investigation into the corrections by the creditor needs to take place. We got to give them time. They've got thousands of clients, so give them the time to do that. Stay in touch. If the dispute is deemed to be frivolous, by which that means it's really, you're arguing, but there's really no basis for the argument, they're going to let you know in writing that there's nothing to be done, that the report is going to stand as is. If there's a correction, they will let you know that in writing as well. Save all of your documentation about the corrections. You may also request that the agency send a letter of correction to the agencies on your behalf. If they do, follow what they're telling you to do, by which I mean if there is a nominal fee for doing that, and there may be, depending on the length of the correction, do what they say. This is going to benefit you greatly to get that done.
When you say agencies submitting a letter on your behalf, I do find that to be extremely true, and this has to do with student loans.
Oh, yes.
When you apply for a deferment or anything that you're doing with your student loans, it is a process in which they have to process the paperwork and then report it.
Correct.
There was a time where I submitted my paperwork like I was supposed to, and it got held up with Sally Mae. Then it was processed to the credit or reported to the credit bureau that I was behind on the payment. Once I got my credit report and I saw this, I became very upset because they're in deferment. How in the world can I be? How in the world can I not be?
If it's deferred, it can't be late.
Yes. So I keep all my papers. Now, that's one thing I do. I always say that Walmart should have a competition or a program for those who keep receipts, because I keep my receipts.
Yes.
But I keep my paperwork, especially with important things, and my student loans is one of those, because I learned that you may do what you're supposed to do by a deadline, but it doesn't mean that somebody else is doing what they need to do according to your deadline, because everybody else have different deadlines.
It's true.
So I had my paperwork that I submitted it according to the deadline that was given to me, and Sally Mae had to contact the credit bureau to let them know that it was an error on their part and not mine when it came to my student loans.
Yes.
And I do know that student loans play a big part in your credit score.
Absolutely.
I'm very grateful and thankful that mine now are in repayment, and I'm able to participate in a program. That should actually be a show too. The different type of programs that are available for repayment when you have student loans. But I encourage the listeners, if you have student loans, to talk to your borrower. I can't speak now.
Borrower.
Thank you so very much. About your student loans, because that has something to do with your, what is the word I want to use? Your
Debt to income.
Yeah, debt
Yes.
to income ratio.
Yes.
I had to learn that when I was looking for a home. So those student loans play, even if you're making payments on them, that debt to income ratio does factor in when it's time for you to apply for a home.
Very good. Let's peel that back a little bit. So when you say debt to income ratio, that means that for every dollar, the amount that is committed to bills that must be paid. So just using $100 as a round figure example. Lenders don't want to see a debt to income ratio higher than between 42 to 45%. So using that $100 as an example, that means that if when your bills are calculated that you owe $55 out of every 100 that you earn, that means that you are 55% in debt to income ratio, which far exceeds or falls well outside of any recommended or allowable ratio. So taking into account what your bills are, yes, the bank is going to look at that. So not just having a good credit score, but also having a debt to income ratio that falls well within that maximum bound, which is going to be somewhere between 42 to 45%. If you are in a circumstance where you see, again, that something on your credit report is showing up doubled or it is incorrect, that is going to be an impact, because we are using your credit report to calculate not just your score, but how much out of every $100 that you're making is dedicated. That means you should be paying that out. We're going to take a look at that. I like to look at it this way. If you have credit cards, if you are over 50% of the line that you've been given, you're going to want to back that down and pay more of that down, because we're taking a look at that. If you are nearly maxed out on 2 or 3 cards, yes, maybe you are paying them, but if you are nearly maxed out, we calculate that and look at it in this way. If you are already nearly maxed out, what is the likelihood that you're going to be able to pay down or pay off that line of credit in order to prepare yourself for home ownership? So again, that debt to income ratio is huge. So 2 factors here: good credit score and a well-maintained debt to income ratio.
When you're speaking about credit cards, a low balance, what should be the percentage that I have available, or how much should I use on my credit cards?
Stay somewhere, stay under 49%. Once you hit 50%, that's going to impact your score, but it's also going to impact what we're looking at as the load of the debt that you're currently carrying.
Okay.
So what you're carrying, even before we get started with calculating, adding in a new mortgage payment, is going to have a consideration for where we are with regard to extending the loan and how good the rate will be for you. So every single credit card, we do not recommend, don't close anything out.
But why not?
Because that's an impact to the score in a completely different way. So you don't want to carry more credit than you need. Now, let's all be honest. If we are at Target and they say we're going to give you 10% off if you open a card and you go for it, and then you're at Macy's and they say we're going to give you 20% off if you open a card, that is very, very tempting. But what happens is you wind up with 15 cards, and if you are utilizing all of them at once, your debt to income could be incredibly impacted. Now, for those of us, and I'm going to own this, who like to do a little bit of shopping, making certain that I don't have a whole lot of cards that are open became something that was very important to me, just from the perspective of I'm getting older. I don't plan on working forever, so I don't want to carry a lot of debt. The more cards you have, human nature says, well, I have another card. Let's go ahead and go shopping. I say limit that.
Okay.
Limit the cards to what it is that you're actually going to use. It's not bad to have a lot, but if you maintain, I want you to manage what you have out there. The negative impact of closing out the card, you lose a few points. It's not a big hit, but just look at it this way. If you closed, you looked at your credit portfolio, you see you have 15 cards and you really only used 3 and you close out those others. If you only lost 1 point and you closed out 10 cards, that's a negative 10 to whatever your positive score was.
Oh my goodness. So you really have to have discipline once you pay off a card, not to go over 49% if you use it again.
That's correct.
Ooh.
Yeah, that's a hard one.
Al,
Yeah.
could you do that?
No.
Because Amazon Prime is sure enough having some good deals right now.
That's too much.
Well, listen, if you go up to your 80 or 90% of what the line is, have yourself an action plan and get yourself back to under that 50% as quickly as possible. Taking a look at what your score is, and I challenge everybody to do this. Take a look at what your score is now. And really start monitoring how you're using your credit, because your credit is your power. The better your score is, the better rates you'll get, the consideration for what kinds of lines are available to you. So just manage that process. And for people who are listening, who are thinking, well, good night, I'm already maxed out on 5 cards. There is still hope. Do not give up. Keep making your payments, and you can always call your creditors and let them know where you are and what you're doing, and that you want to maintain making those payments so that you can stay positive and keep your score climbing steadily. Every time you make a payment, every time you pay as agreed, it's a positive. It's a positive.
You got me nervous on the part when you pay a credit card off. Don't close it.
Don't close it. Leave it alone.
It's points against you. Alrighty, credit scoring. I do know that there are certain categories for your credit score. So what are the categories and what are the numbers associated with the categories?
Okay, so this is my personal favorite, and I am absolutely challenging myself constantly to keep my score above 760. 760 and above is excellent credit. Just so you know. The good category scoring is 725 to 759. This is good credit. This means that you are still entitled to some very, very nice rates that are going to be more favorable. And then the fair credit scoring is 670 to 724. Now, I have a lot of people who say, well, my credit score is over 700. Okay, let's be specific. Because if it's up to 724, that's considered fair. You still will get something. You can still get credit as long as your debt to income is good. But the better the score, the better the perks there are for you. Lenders recognize if your score is 760 and above, that means you pay on time, every time, no excuses. It's in the amount that was agreed to. You are paying as agreed. That is hugely powerful. Manage your credit. You can get there. It does take time. It does take time. Everybody's had a bump or a bruise on their credit. It's what you do to recover that's going to make the difference. And it does take commitment. You have to be committed to that process.
For parents who love their children as much as I love my son, I like to talk about cosigning. And how cosigning, as much as you want to help your child out, Mom, that has nothing to do with me because I pay my debts. But for those children who may not pay those debts,
you know who you are out there.
How important is that to be cautious about co-signing for other individuals?
It is hugely important. I want you to understand, if you decide that you're going to be a co-signer, you are taking on the debt.
That is true.
Bottom line, if your wonderful son missed the payment, the lender is expecting you to make it.
Mm-hmm.
You're saying, well, wait a minute, I don't drive the car. My son has the car. I was just a co-signer. I was just trying to help him get his credit and get his car.
Mm-hmm.
We see it as an alternative for payment.
That's true.
And we hope that he will pay on time and as expected, because the bottom line is, if you help someone, whether it's a family member or friend, and co-sign for them and they don't pay, and you don't know about it, the surprise of all surprises is believing that you know you make your payments. Now you're ready to go and get credit, and you find out your score has plummeted.
Yes.
Not through your own failings, but because you co-signed for someone who promised to make all the payments on time. I never missed anything.
Right.
And you find out that may not have been completely true.
That is true. I'm on the line right now for an apartment for my son. So I drilled it in his head. You better make those payments.
Make the payments.
You
Make
know,
the payments.
It stuck me before on an apartment, so I gotta give him some faith on this as an adult now. So let's say if you are young, starting out, and you are interested in building your credit.
Okay.
What would be the process or the steps? How about the steps in building your credit when you don't have any credit?
Okay. I always recommend using a secured credit card. That's where you give the bank the money. They're going to hold it, and they're going to give you a credit card with the limit of the cash that you gave us to hold. So by way of example, we could do a $300 credit card. That's a good amount for a young person, first time starting out.
What about an old person too?
Old people too. Anybody can get it.
Al, we're going to Flagstar Bank tomorrow.
Going to Flagstar.
Right.
Come on to Flagstar. We can help you with this.
Okay.
So you're going to give us the $300. We're going to hold on to it. You get a credit card for that line. You can spend up to that amount. Again, you are going to make your payments on a timely basis. Whatever the minimum payment is, you're going to make it every month. I always recommend pay more than the minimum whenever you can.
Okay.
You want to keep that line under 50%. So
Let me ask you one question on that. So let's say that if you did do the secure credit card and you put $500 on the card,
Okay.
and you charge $500.
Now, you just went over.
You just went over.
You just went over.
If you turn around and pay that off, is that a
That's
positive?
just fine. That's a positive.
Okay.
And I do recommend that you keep in mind, when you charge something, the tax is going to be on there. So if it's $500, state of Michigan wants their 6%. So you have now gone from $500 to $530. You are now immediately over your line.
Ah, got you. Wow.
So you have to think about that.
The tax. Okay.
Also, don't forget, I don't want you going out and buying something for $500 if your line is for $500.
Okay.
See if you can get it on sale for, $3.99 or something.
Okay, Al. Gotta be $3.99.
$3.99.
$3.99 plus tax.
If it's $3.99, you're good to go.
Right.
But you know what? The reason why I asked that is because I didn't know if making payments towards that $500 that I spent would look better opposed to just paying off the $500.
Either way it goes.
Okay.
Either way it goes. The incremental payments does give us a look at your history of payment. If you make one payment, there's no history there.
Okay.
If you stretch that payment out over 5, 6, 7 months, even though you have the cash to pay it off immediately, if you give us several months where we can see a history, that helps.
Al, 28 minutes is not long enough to be talking about building your credit.
Well, I hope everybody who's listening got something out of this.
If they're interested in calling Flagstar Bank, give us the information.
My Flagstar is located at 6200 South Saginaw in Grand Blanc. My phone number is 810-695-0159, and call me. My name is Cheryl. I am ready to help you manage your credit.
Listeners, thank you so much for tuning in this week. Hopefully you'll join us on next Wednesday. Have a good week.